Welcome to the Real Vision Daily Briefing. I'm here with Tony Greer, editor of the Morning Navigator, and everyone's been patiently standing by. The technical gremlins are at it again, Tony, but what are you going to do? At least we're on.
Let's keep going, work right through them, Maggie. Nice
exactly. It's good to see you too. I was just asking you if you recovered from your epic AMA, a beer with Tony Greer the other day. It seems like you have.
That was a lot of fun. I didn't realize how much fun it was going to be. I really enjoyed interacting with so many people about so many different things that it was really, really fulfilling and fun exercise. I'd love to do that again.
Yeah, we have the smartest viewers, I always say, as you can tell from the questions we got, but you were kind of watching the live stream. So goes without saying, if you have any questions for Tony today, you know what to do. Go ahead and drop them in that chat, or you can tweet us at Real Vision. So we got a CPI number. We seem to be getting really geared up for these inflation readings, Tony, and economists sounded pretty concerned about it after the fact. We saw 0.5% increase on the month and a 6 handle still on that year over year. But the market kind of bounced around a little bit and then seemed to kind of trade right through it. What were you watching today? What was on your radar?
You nailed it, Maggie. To me, very quickly, very shortly after the number came out, that was as bang in line as, you could have sliced it up, really. And really, there was nothing to chew on for the people looking for a blowout inflation number on the upside. There was nothing to chew on if you were looking for inflation to really collapse. So the market has thoroughly digested this data as it has been presented by this sort of analysts a while ago, and that's what we got. So, in my opinion, what happens then is the market gets back into the cadence that it was in before the data came out. And if you ask me, so there's some really interesting tells on the tape. Treasuries remain in their downtrend. U.S. 2-year yields stretching to new highs today. Suddenly we're 15 basis points from the high of the move in 2-year yields. 10-year yields just put in a spectacular holding pattern at moving averages and are recovering their trend higher on a day like today, which is really, really relevant. The curve is imploding. Curve 2s 10s is now minus 86 basis points. Don't look to me for advice. I've never seen it trading this level, so I have very little experience trying to even conjure what this means, other than a continuation of nonlinear chaos that we've been seeing.
Yeah, that's a really good point. And listen, I am gonna flag that I had a really, really fascinating conversation with Nancy Davis today from Quadratic, who had a lot of things to say about the bond market, about yields. And you're right, we haven't seen this. I mean, nobody knows what to make of this. There's some crazy charts about this, and she's concerned about it. So we're gonna have that interview out next Monday. I really encourage everyone to have a listen to it. I learned an awful lot from her today. But yeah, it seems like the market is, everyone's sort of looking for direction. Everyone's bracing for something to happen, and it doesn't seem to be that anyone knows what the catalyst is going to be. It's kind of a tough environment.
Oh, it's really tough. It's the toughest we've seen it. But some of the things that have been, consistent, the equity market doesn't want to go down right now. I feel like there's a lot of people betting against it and betting on a recession still. So that's one of the factors. It looks like a lot of people spent a lot of money on volatility premium in the last several weeks and months, and that includes retail traders right up to Carl Icahn. And we're not rooting for or against anybody. We're just noticing that a lot of that option premium is going to expire close to worthless if things don't change super fast, as in when we get the PPI number on Thursday. If that's not the upside surprise and, to cause some volatility, that option premium is toast. The VIX continues to bleed, closing out on the lows today. And commodities look pretty buoyant today. So there's a lot of trends that are really getting shaken up after this number and kind of just getting back into the mode that they were in before the number. So that's something to look out for.
Do we have options expirations? Is it this Friday? I think we have an options expirations coming up, which is only going to make all of those points
I think
more relevant.
I think that's next week, but I could
next
be wrong.
week. Okay, yeah, no, I know it's in the next on the kind of calendar. So
Yeah, I'm not positive. I stay away from options, as you know, Maggie, but I should know that date either way.
No, that's okay. I just know when we were looking at, there's like a litany of things coming, and that's one of them. Whether it's this Friday or next Friday, we'll figure it out. But talk to me a little bit about what's happening in commodities, Tony, because we did see, it's been in a downtrend, but we did see a lot of people sort of been asking, and we're probably going to get this question for you today. Are we bottoming here? So what part of the commodity market are you looking at? Because we had news on a couple different fronts.
Yeah, for sure, Maggie. Let's start with natural gas today, I guess, right? That rallied 8%. That's really relevant in that natural gas just went from 11 to $2.50, and finally stopped imploding. And if you would have said to a lot of energy traders, that natural gas is going to be on a straight line down while there's natural gas infrastructure, as in pipelines getting blown up, and we're heading into the dead of winter here, and there's still an administrative attack on supply, and that still the commodity is going to be in a nosedive south. It tells me that people might have gotten a little bit over their skis long the commodity, right? And so now we'll see an overshoot on the downside into this low $2 range. And man, if it stabilizes here, this could be the tip of the commodity spear for the next couple of months if it decides to have a retracement trade. So, natural gas can retrace from 2.5 to 7 and still be a massive sale. But God, what that would do to the grain complex and to the whole entire commodity complex at large, it would really set it flying. So that's something to keep an eye out on. And when I combine the natural gas situation with the upside potential it has with the fact that the Biden administration just announced another 26 million barrels of SPR that are going out for sale. And I look over at the oil market, and it has given back approximately $1.25 of the 8% rally that it posted last week on that SPR release news. Man, if I was betting on oil to go down and I got that reaction from the SPR news, I would be looking for the exit very shortly. So we'll see if that becomes the case in the oil market and she continues to kind of cover her way up through the moving averages. But to me, that's kind of a low-hanging fruit trade for this year that I've got a close eye on. Both of those, both energy commodities right now are set to rally in the short term. So I'm kind of looking for that to pan out on the screens. We'll see if I'm right.
Yeah, I noticed you're saying rally in the short term. So it's not clear if this is just a retracement or the start of something bigger.
No, not at all. Crude oil, I've been saying that as bullish as I am, I'm not long a contract to crude oil yet. In fact, I just lost money being long contracts of crude oil. I'm going to keep taking stabs at this trade as long as, broadly speaking, the obvious attack on supply remains. But more specifically speaking, as long as oil looks like it wants to bottom at these levels in the low 70s, mid 70s, as long as the spreads hold in here, as long as the calendar holds in here, as long as crack spreads remain firm and the equity market is holding its place, I mean, the crude oil market has a real chance to go explosive up through the moving averages. So I just needed to do something to actually break the rules that it's been going down on, right?
Yeah.
It's been checking every technical box in the book on this move lower until just recently when it started to consolidate sideways. So until we see it start checking some reversal boxes, there's nothing for me to do but sit here and watch and make sure that I've still got the story intact. But, when I look over at, the CEO of Saudi Aramco saying that, he sees this attack on supply as being a threat to energy security, and the fact that Saudi Aramco is not going to be in that camp of cutting down investment in the fossil fuel industry, I feel like those guys are skating to where the puck is going now. So, it's going to be interesting to see how this market pans out. But the energy market is definitely quietly in play right now.
Yeah, I like that, skating to where the puck is. So you partially answered this, I think, but Jim asking, nat gas was up 8.6% today. Do you see that trend continuing with greater exports of domestic natural gas?
Yeah. I'm just looking at price action right now because that's been the ruler, right? I mean, there's been nothing to look at. There's been everything to look at for support in natural gas, and you can still look at flat price and watch it drop like a rock. So till that dynamic stops, that's what I'm hanging my hat on. And so days like today, where we start at the lows and trade straight up and have an 8% rally day, and it's about the sixth or seventh time natural gas has traded up and down through this 250 range. Now at least we can make a case that we should be sitting up in our chairs looking for this thing to reverse. And like I said, there's so much room on the upside that it's going to be really, really tempting if it starts feeding on itself.
And are you watching for the commodity, the move in the prices in the commodity itself first? And what's the relationship between producers?
Yeah, well, the producers have been a tremendous tell lately, Maggie. There's no telling what they're going to do if natural gas starts rallying, because you look at stocks like Swanee that have backed off, like Southwestern Energy, and a lot of the other natural gas producers' charts look the same, where you saw natural gas go from 11 to $2 and the chart gets utterly decimated. And, stocks like Southwestern Energy back off from 7 to 6 or from 7 to 5.5, and they consolidate there while natural gas nosedives the last $3 or $4. So that stands to reason now that if natural gas starts rallying again, those stocks are set up to start exploding because they built themselves such a really, really, technical launch pad lately that, if you look over at XOP and some of the other, broader indices, you can see that, if natural gas names start picking up the pace and catching up with ExxonMobil and names and Marathon Petroleum, that these sectors could be off and running. And all they're going to do is finally catch up to the leading sectors on the year. Right now, energy is definitely, underperforming the S&P and underperforming, the year-to-date leaderboard, which includes semiconductors and airlines still, believe it or not. So for them, it'll just be catching up to the pack.
We have fantastic comments. First of all, Christopher says Expo's this Friday. Thank you, Christopher. February 17th. Somebody else said, and Oliver letting us know that Airbnb beat on profit and revenue. So thanks all for keeping us up to speed while we have a million screens open. We have we're going to stay with the commodity space because we have a couple of other questions about that. And Paul asking, Tony, are you bullish like Cuppy on offshore drilling like VAL and TDW?
I'm extremely bullish the space. I'm not a single stock specialist at all in the class that Cuppy is. So please take that into account when discussing this with me and with him and Maggie. Like I said, I'm aware, I kind of look to the kingpins of the sector to get my news on how the sector is doing. And I remember digging into Schlumberger earnings. I remember saying like, wow, I got to look for an entry point in oil services names. And then you've got those drillers, those E&P names, Tidewater, they're obviously going to be set up for success. So many of them have cut their balance sheet and de-risked so much in the last 5 years that, they only have upside once the oil price starts going. So yeah, I'm bullish. I'm bullish across the board. It's hard for me to decide whether I'm more bullish refiners or oil services from day to day, but I think as long as you've got exposure across the entire sector, you're doing the right thing. And just remember, you're still not in the sectors that the S&P is really valuing just yet. So that's a worm that's going to have to turn because we're still lagging talking about all this bullish stuff.
Yep. I was just going to say that. The other thing is we're talking a lot about, the U.S. We're talking a lot about price action. We're talking about U.S. tapping reserves. Haven't mentioned China, the China reopening at all. I know Andreas has been digging into this and doing a ton on this, but is that a fundamental story that you're watching at all, or are you just going to keep keeping an eye on that price action for your signals right now?
Same, Maggie. I stick to the price action for my signals right now. I'm never going to feel like I've got an accurate handle on what the hell's going on in China or their economy. I kind of watch how the narrative filters out and then peters out through the news stream and see how the markets reacted to it. It looks like we're definitely discounting some type of, restart activity from China. It looks like it might have been a popular idea coming out of the start of the year, and natural resources had a big pullback because everybody thought it was going to be off to the races. And now it looks like they're finally righting the ship and getting back into rally mode. So that's just the way that I'm looking at that. That's fair.
That's fair. Totally fair. So question from TrillionX on copper. What's your view on copper, Tony? I think Raul was asking you about copper in the AMA as well. What are you looking at there?
In the big picture, Maggie, I stay super constructive because I'll never forget spending the last 6 months of last year watching copper pound that 6,500 level, which was the old highs from 2018 on the LME. When I see that price action filter out after 6 months and the copper price hold in and resume its rally, recover its moving averages, I know big picture I can stay technically bullish until it gives up all of those technical gains. So, what's funny is if you go to hashtag copper on Twitter and you start reading down some of the notes and charts and data points that people put in there, you have to reach for a bib and start wiping up your chin because you start salivating at how bullish the fundamental supply side picture for copper is, So with that kind of story in your back pocket and with price action agreeing, maybe not every day, but broadly speaking, it's doing the right things. Easy for me to stay in the metal space, right? In the metals and mining, I've said is my favorite space this year. Today we got great confirmation of that, and XME is the big leader on the day today. But we got good confirmation where Cleveland Cliffs reported had an outside reversal day higher, right? Opened lower, so buying from bell to bell, and it's now springing Cleveland Cliffs away from a big support level. So to me, it looks like that sector wants to get back on its feet again and start running. So that's a good sign. And so there's a lot of things going on in the metal space that let you remain bullish. And it looks like price action is starting to guarantee once again, even though we're talking about sectors that are lagging the S&P on the year. I think, XME, I think, is still above the S&P, but not in the lead on the year.
Yeah. And are we counting gold in that as well?
Well, there's a lot of gold miners in XME, so you can include that. You can call that an all-out precious and industrial metals and mining ETF. I think it's fair. It's probably more industrial weighted with a bunch of steel companies in it and iron ore. So, you got to carve it up and do your own research.
This is a really interesting question. And it's such a sign of the times, isn't it? Oliver saying, question for Tony. Chat GPT says it's time to go long Tesla. Is it correct?
Oh my God. Tesla's a big name on the leaderboard today. A 2 sigma rally, a 7.5% extension right up through all the resistance that everybody thinks it's going to fail. Man, there's a big down and back in Tesla from 185 to 100 and back through 185. That's sort of conspicuous looks of a bear trap to me, and it's hard for me to get too bearish Tesla. I'm pretty neutral here because it's kind of rallied all the way back into resistance, right? But you got to look at it and say, okay, if it gets back up above the 200 day at 225, man, that's going to incur a lot more short covering. That whole down and back episode seemed to have, a little bit of Musk fingerprints on it, where he might have been selling Tesla to finance Twitter on the way down and then propping it back up, on the way back up. Like, I'm not sure what went on. The Tesla specialist will tell you much better than I will, but that's a conspicuous V bottom to me that I don't want to be battling too hard on the downside again, so we'll see what happens. But I don't get permanently bullish or bearish Tesla ever.
Yeah, it sort of has its own dynamics, doesn't it? But the Chat GPT thing is interesting, isn't it? I mean, that's that's a force that we've got to reckon with now, I guess. That's gonna move stuff around.
It's interesting until you ask it about something partisan, and then you realize that it's just another program.
Exactly. It's a question from Nathan. Also interesting. Is this a new bull market? It feels like everyone, I'm assuming you mean in equities, Nathan. It feels like everyone is hating this rally and things just go up and up.
Man, I feel like you. I really do. I still feel like at some levels we're working out of the negative sentiment bubble that we were in when the market was actually pounding its lows last fall. I think that's when it was, right?
Yeah, I think it was like October or something, wasn't it?
We traded down to 3,500 and back up to 3,600 in the same day. That was the bottom. That was October. So definitely in the fall. To me, that was sort of the negative sentiment bubble, like getting so big that everybody was in, it lured everybody in. And then, we've had fits and starts on the way out, but I feel like still we're working our way out of that bubble, and we worked into another negative recession bubble. right? Like no matter what, no matter what, I still get the feeling that people are bearish the S&P because a recession is pending.
Mm-hmm.
And not only do I not agree with that line of thinking necessarily, but let's try to remember that the stock market is a super forward-looking market. And if you ask me, it was staring at a recession in the face when it printed that 3,500 low last fall. And so the more you talk about recession, the more the S&P says, yeah, I remember those days. That was last year.
Yeah,
Right. And
exactly.
so, with all this year, all of a sudden semiconductors come alive and they're at the top of the leaderboard. Social media is short covering like mad to the point that it may have actually blown itself out on the downside. And if you see those two sectors get going on the upside with, large cap stocks leading the rallies, I don't know what the bear's plan is, because at that point the indices are all up and gone and you have to look at all the trends resuming. So it gets really, really hairy, and I'm not going to make a call one way or another, but I mean, my meter on whether or not a new bull market has started is sort of right down the middle, 45, 55% chance. And I kind of swing back and forth every day. So we'll see what happens. But the more price action does what it does today, the more chance it looks like a bull market's coming. So
yeah, and that's a point a lot of people have been talking about. You can hate it and you cannot feel good about it, but it's hard to, it's hard to ignore some of what's happening in the price action. I want to run a clip from an interview that Raoul did with David Dredge. He's the CIO of Convex Strategies, and they were just talking about really the difficult environment we're in, and how you've got to sort of try to navigate this, and what really David calls profiting from the unexpected. Let's have a listen to that clip.
And so we're in the business of solving the compounding problem by creating convexity in people's portfolios, by changing portfolios so that they perform the best when you're wrong, when unexpected things happen, as opposed to performing the best or targeting their best performance at the expected outcome, right? As it turns out, not surprisingly, things that are expected to happen rarely have asymmetric returns. Things that are not expected to happen, whether they're, exploding higher private equity tech stocks or Amazon or whatever, or busts and sharp volatility correlation spikes, those things, if you construct a portfolio that benefits from them, to, again, Nassim's terminology, that's anti-fragile, will compound far, far better. And you get far superior, risk reward dynamics in a multi-cycle investment portfolio.
And that full interview is available on the website. You can scan the QR code or hit the link to figure out how to join if you haven't already. But it does seem like these are very complex times, Tony, when people are trying to figure out how to navigate this stuff.
Yeah, it was. It was interesting to listen to that clip, Maggie, right? And can you imagine, being smart enough to have risk on when the unexpected happens and to be capturing it the right way?
Yeah.
I mean, that's another level of brain power. I usually capitalize on, market blowups by being flat when they happen. So it's really wild to hear people that are trying to position for the unknown, so that's it was an interesting angle on trading perspective there.
Yeah. And I mean, I think and it is complex, but it's things we need to pay attention to, and dive into, because there are more and more retail people playing in some of these instruments that are available, maybe not to the extent that David is, but, once you have that happening, then I think we all need to pay attention. So certainly worth it. Ralph just mentioning that he watched it. So well worth everyone going through. Got a couple more questions I want to try to get through in the little bit of time we have left, Tony. And one of them is, this is such an interesting one. What do you think isn't being talked about enough?
Well, we can go any direction with that.
I know it's kind of a hard one, but it's a good one.
Yeah, since it's in our wheelhouse, we can start with this one as being what's really not being talked enough is the fact that it looks like the Biden administration blew up the Nord Stream pipeline, according to Seymour Hersh. So if you want to talk about what's really not being talked about enough, that's something that is a major deal, and it's right in our energy wheelhouse. So it's worth mentioning.
Yeah.
right? And that's something that's not being talked about enough in
Well, you know
terms of,
what's not being really discussed is geopolitical risk in the way that it dominated so much, but we still have war raging. We still have now things being shot out of the air every 5 seconds that everyone's trying to get their head around. And so the geopolitical risk is still out there. But again, have the markets are they just looking through it? Have we just gotten too complacent about that?
yeah, clearly, Maggie. I mean, we're definitely too complacent about that. The thing about, in my opinion, being in a fifth generation warfare is that you're kind of numb to these like one-off occurrences that are, tragic and horrible, but, far enough away from you that you think that you're safe for now, like the train derailment in Ohio, and what a horrible tragedy. And, there's people that are suffering immediately and that have to evacuate, right? If you're there, there's just that much toxin in the air. And I don't know enough about it at all. And I'm the last expert on this topic by 100 miles. But, to me, when you see, we catch China flying a spy balloon over our country, and then we have multiple train derailments the following week. And, man, who knows what's pulling what lever out there, but I feel like that commodity risk during a period of resource nationalism is dramatically underpriced on the upside.
Yeah.
So,
That's a really good point.
yeah, I wake up every day expecting to see, a commodity hockey stick higher because of, an international event that went on, and every other morning I expect it to be WTI. So we'll see if that ever does happen. But man, it doesn't look like this conflict in Ukraine is getting, we're not easing the tension there, certainly anytime soon. And so I'm just amazed at how cheap some of these commodities are given that geopolitical conversation. So maybe that is something that we're not talking about enough.
Yeah. I'm gonna catch up with Peter Zahan again in a couple of weeks it's almost been a year since we sat down and talked, and I'm gonna catch up with him and get some of his thoughts. So we'll put that back in focus certainly here at Real Vision. I want to squeeze one last question in about commodities because there are two that we haven't talked about. And this is from G Blackburn on the site. Is platinum and palladium downtrend set to continue?
Man, everybody's asking me about platinum group metals lately. Literally.
Oh, that in itself is interesting. Why is that?
Yeah, put it this way. I haven't even looked at the chart because for me, there's so much opportunity in trading the oil market, the energy stocks, the S&P, things that are all, proving themselves out with price action, et cetera, that it's hard to pivot into that market.
Mm. It's interesting that everyone's asking about it. Every time something like that happens, I always think of Jared's, crowded uranium trade. But G Blackburn, fill us in on what it is that and there's some chatter about that amongst some of the viewers about that. So we'll have to get to the bottom of why everyone's asking about that.
I mean, you look at platinum, and platinum just did what gold did, only more dramatically. As rates started springing higher, platinum got crucified from 1100 back to 950, right? So I guess the idea is, do you buy the dip down here? It's into the moving average support that it broke away from. Technically speaking, it looks fine, but like I could think of 1,000 more appealing trades than trying to figure out. I don't have any edge in platinum group metals, so I don't know if other people do or if they've figured it out. But I ask a lot of people when they ask me about palladium, have you ever seen palladium? And the answer is always no. And palladium is basically like either in pellet or like dusty rock form that comes in a barrel. And so like when I can barely get my arms around, how and when and where it's used and burned, I know it goes into catalytic converters, et cetera. And I'm sure it's a great trade idea. I just don't focus on things that aren't, immediately liquid and when there's things that are liquid that are flying around and kind of, totally in the wheelhouse of a guy that trades with my kind of time frame. So forgive me if I'm not up to speed on the platinum palladium trade.
I think that the fact that you're not tells us a lot of what we need to know about that. Christopher asking, will the contango in natural gas blunt rallies in UNG and Boyle?
Yeah, I mean, we'd much rather see it in steep backwardation if we want to be bulls in natural gas, but a lot of that premium already came out of the markets. Inventories aren't at dangerously low levels where they're going to go steep backwardation anytime soon. So we're just going to have to wrestle with what's going on and figure. In my opinion, it's not going to. It's always Mother Nature that makes up for the offset, right? And so now Mother Nature is allowing for a lot of natural gas to get stored and not used because it's on the softer side of what she could be doing, which is blowing 0-degree temperatures across the country for weeks on end. Instead, I could walk my dog in my shorts in February, and there's just there's no impetus to be long the commodity right now. Eventually, we'll get into the summertime, and what was expected to be an 80-degree week will be a 95-degree week, and everybody will have the air conditioning cranking, and then you'll see natural gas back on the move going the other way. And it'll tighten up again and get backwardated, and we'll see the whole thing. But everything is cycles with all the commodities, much less natural gas, and natural gas is the toughest one to predict or try to surf, in my opinion. So
yeah,
see how it goes.
And so my takeaway from this conversation is, first of all, we ought to be keeping an eye on geopolitical risks. So thank you for bringing that up. And the big one is that you're really watching the price action in the commodities that you follow so closely, including natural gas, to figure out whether this retracement is kind of laying the groundwork for a more serious rebound. And maybe nat gas is the tip of the spear, as you said. But that's going to be confirmed by price action first and foremost.
That's a good recap, Maggie. It sounds good.
Tony, it's so fantastic. Thanks for struggling through our technical stuff at the beginning. It's always an adventure, but great to catch up with you. Thanks so much.
It really was. Great job today, Maggie. Thank you.
And thanks to all of you. Thanks for the fantastic questions and all the breaking news that you're keeping us up to date on. You guys are awesome. We'll be back tomorrow with Imran, which is always interesting. In the meantime, take care and good luck out there.